Before we begin this video, a couple of things I would like to tell you. If you are a SMCI investor, you absolutely need to see this video. You need to know the information that I'm about to tell you. If you're not a SMCI investor, this might be one of the most interesting stories you will hear all week. If it's not, you are more than welcome to just press dislike and leave us a comment that this video sucks. But if this is an interesting story, like from you, a comment and a subscribe if you like our channel. On August 27, I saw in the headlines that there is a Hindenburg report which was issued on SMCI. And I was kind of skimming through the headlines and just seeing that there is some allegation of something weird happening to the accounting, some news about the company. I just briefly read it and thought that this is just a hearsay. Probably the market thought pretty much the same because the stock of the company fell something like 3%, so it wasn't like a major disaster or something like that. And the next day on August 28, we had Nvidia earnings, so everyone was kind of anticipating that. On the next day, in the morning, apparently SMCI issued a statement that the company will not be issuing the annual report on time. They need some more time to go over their financials, or as they said, SMCI management needs additional time to complete the assessment of the design and operation effectiveness of its internal control over financial reporting. What the fuck? So this is not usual and this is not normal. The companies need to fill their annual reports on time. Very bad things happen to companies who do not do that. Do you know why I know that? Because in 2018, there was a company called SMCI who did not complete their annual reports on time, and they got delisted from Nasdaq because of that. So these news got market attention, and because of these news, SMCI stock fell 26% on the day. So kinda the Hindenburg report did not do a lot of damage, but what the company said did. And today I would like to talk to you about what was in that report that got the company so worried out. You probably haven't read the report because it's quite lengthy, but I went and read it for you, and I would like to tell you kind of 5 basic things which are in this report. Now, one more thing. We are SMCI investors. We own SMCI shares. We had some videos on the company on this channel. We explained why we like this company so much. So the company was kind of in the right place in the right time. They are riding this AI wave that it is right now. The company stock went up like gazillion% in the last half a year, and we explained all the financial and all the business details that we knew of. The problem is there is a lot of things we didn't know about, which we read from this report. Before we dive into report, I will say a few words about the Hindenburg research, what it is. Hindenburg Research is the company. They were founded like 7 years ago in 2017, I think. They are investment research company who are basically on the short selling. So what they do, they're investigating malpractices of various public companies. They create reports, pretty lengthy one with some kind of evidence and some kind of interviews with former employees, stuff like that. They publish these reports, and their main goal is for the stock of the company to tank, to fall sharply because the company itself shorting the stock of the company. That's how they earn money. Now, before you kind of talk about their vultures, they need to be prosecuted and stuff like that. No, this is perfectly legal. This is perfectly normal. And Hindenburg Research is one of the top companies in this business. They are the company who actually wrote the report on Nikola, if you remember this company, after which Nikola's share fell by about 40% and the company got charged by SEC. They wrote report on Adani Group, who actually lost $150 billion in market cap following the report, and most recently they wrote report on Icahn Enterprises, the Carl Icahn company, which stock fell by about 50% after the report. So when Hindenburg Research release reports, it needs to be treated carefully. Okay, so as I promised, 5 categories of kind of allegation in this report regarding SMCI, regarding the super micro stock. The first one is called accounting irregularities and channel stuffing. SMCI has already had a history of kind of accounting irregularities. That was the reason the company got delisted from Nasdaq in 2018 and was charged by SEC in 2020. The company had to pay a fine to SEC for widespread accounting violation. The fine was $200 million. Just 3 months after settling the whole score with the SEC, on April 2024, a lawsuit was filed alleged that SMCI resumed improper revenue recognition. So basically, we have a lawsuit which was filed something like 4 months ago, 5 months ago, which stated that what the company did in 2018, in 2020, they are resuming doing right now. Moreover, in interviews with former employees, it was implied that the company kind of pressured salespeople to overstate the sales number of channel stuffing. Channel stuffing, by the way, is when you are sending more stuff than needed to a distribution channel to actually inflate the sales number, and then the stuff gets sent back, but you already kind of reported the sales number, and to supply defective production near quarter end. So basically, when you don't have enough inventory to send, you're starting to send defective inventory. So again, you can inflate the sales number. Now, to be honest, when I read that, when I heard that, I kind of thought, well, okay, it's kind of sounds like some disgruntled employees who got probably laid off and they're just spilling the dirt on the company. And a lot of this is hearsay. They're not saying the names of the employees and it's just based on some interviews. So I'm not sure it got me really interested back then. The second thing is a bit more interesting. It's called related party transaction and undisclosed relationship. So stay with me. Here comes. We have two companies. One company is called Abelcom, the other company is called Compuware. These companies are controlled by SMCI CEO brothers. So we have SMCI CEO and we have two of his brothers who are both managing the companies which are called Abelcom and Compuware. Now try to focus and stay with me. These companies buy parts from SMCI, assemble these parts, and then sell this product back to SMCI. For this, these companies over the last 3 years received $983 million. In addition, these companies are also renting warehouse and factory space to SMCI. Are you still with me? Before you're starting thinking, well, okay, you just have two companies which are managed by apparently very talented family. Couple of things about these companies. 99.8% of Abelcom's US exports and 99.7% of Compuware US exports are to SMCI. So basically, these companies, their only client or supplier, I'm really not sure, like both client and supplier is SMCI. So basically, these two companies are only working for SMCI. They're getting stuff from SMCI, doing something, sending stuff back to SMCI. In addition, they own some space which they rent to SMCI, for which they receive almost $1 billion in the last 3 years. But it doesn't stop there. We have two Taiwan-based companies owned by SMCI CEO younger brother who are making server components. And here's the kind of fishy part. These companies are operating out of Supermicro Science and Technology Park in Taiwan. In addition, we have another brother of SMCI CEO who operates undisclosed Hong Kong and Taiwan entities which resell SMCI products and also provide professional services. So we have a family of 5 brothers. One of them is CEO of SMCI. 2 of them are managing 2 different companies who are buying stuff from SMCI and selling stuff to SMCI. In addition, they are renting space to SMCI. One of the brothers renting space from SMCI, and one more brother is reselling SMCI stuff and providing professional services. Is it illegal? I'm not sure. Is there a conflict of interests here? Very much so. Is it fishy? It's fishy as hell. Like, if it was a private company, by all means, do whatever you want. But this is some Logan Roy level of complicated family relationship. And I'm not sure it is very allowed in public companies. Now, the next part is illegal. And the next part is kind of the reason why I got a little bit emotional about SMCI. Let's dive into it. So, exports of supermicro high-tech components to Russia have tripled since Russian invasion to Ukraine. SMCI are selling their components to Russia, and the volume of selling has tripled over the last 2 years. Now, you might be saying, okay, SMCI is a huge company. They are not really always controlling who they are selling to, and this could be an honest mistake. The problem is SMCI already has kind of historical context. In 2006, Supermicro pleaded guilty to a felony count of exporting banned components to Iran, and they had to pay fines for that. In addition, at least 46 companies that handle SMCI products to Russia since the invasion are now under US sanctions or US government watch list. If you are holding SMCI stock, there is a very real possibility that SMCI will be charged with selling stuff to Russia which they cannot sell, and then they will be under sanctions. We are not talking about like bullshit server parts or, just boxes for whatever servers. Almost 2/3 of SMCI exports to Russia since the invasion correspond to what is called high priority components that the Russian military may be diverting to the battlefield. Now, let's dive into more specific examples. There is a company which is called Niagara Computers. Niagara is how Russians call Niagara. They are supplying to one of the Russia's supercomputers at the sanctioned research facility. Now, they have received at least $46.3 million worth of SMCI products over the last 2 years. Almost 30 million of SMCI components have been shipped to Russia, largest importer of dual-use civilian and military chips, via a newly created Hong Kong shell company. I know that investment and stock investment, and in general, when you're dealing with the money, it should be very kind of logical thing, devoid of emotions, and you cannot think about emotions, and this is how it's supposed to be. But a couple of things here, like both me and Julia were creators of this channel. Our families' lives were majorly impacted by the Russian invasion to Ukraine, and to be honest, I don't want to have any part of the company who sell to Russian government. I would sell SMCI stock just because of this information, but keep listening, we have some more cool stuff on the company. Let's go to the part number 4. Do you remember the 2018 delisting, which we've talked about at the beginning of this video? So it was a huge scandal, and there were 4 top-level executive employees who got fired. They got publicly blamed for every wrongdoing. There were like 3 top executive employees and the CFO of the company. They got blamed. The CFO got individually charged by SEC for what he did then. So these people got laid off from the company. Question for you: do you know what these people are doing right now? And the answer is less than 3 months after SMCI paid its fine to SEC, all of these 4 people were rehired. One of them right now serves as a board member of SMCI. The second one is a consultant close to the CEO. The third one is VP of Business Development. The former CFO, by the way, the one who got individually charged by SEC with accounting violation, was hired by a company owned by CEO's brother in May 2023. Let's say you're not really impressed by all of these allegations because you say, okay, SMCI has an amazing product. They're selling a lot to the best companies in the world. They have a very close tie with NVIDIA, and I don't really care about any of this stuff. So let's talk about SMCI products and their very close ties with NVIDIA. So NVIDIA CEO Jensen Huang publicly stated that Dell by the way, that was stated in May 2024, that Dell is the best in the business of kind of creating the servers. Dell are the direct competitor of SMCI. CoreWeave, who was previously SMCI's biggest customers, announced a deal with Dell on thousands of GPUs in December 2023. Tesla, which previously worked exclusively with SMCI, has now signed major deal again with Dell. Amazon AWS cut ties with SMCI over delivery issues. DigitalOcean switched from SMCI to Dell after service issue described previously as a train wreck of sorts, and GMI Cloud reported malfunction of 17.5% of 256 SMCI servers and moving away to HP. So after we went over the Hindenburg research and saw all of the allegations, we have decided to sell all of their stock. And right now we have taken a huge loss on SMCI, but this happens and this is the part of investment. And the reason why we decided to sell all of the stock is because we are not ready to take on so much risk of the company. So basically, when you're investing in the company, you have the risk of the business, that the business will not progress as you expect it to progress, and you have kind of the market risk. What if the whole market goes into recession and your stock will tank? To add to this, the risk of sanctions, SEC charging, and the accounting malpractices allegation, this is kind of too much, not to add the whole situation with selling high-tech stuff to Russia. So we would never support any company who is doing something like that. I don't know how entertaining was this video for you, but hopefully it was informative and hopefully it will save you a lot of money. Let us know what you think in the comments. I would really like to debate with all of you about why you holding the stock, why you're buying the stock, why you're selling it. We are answering to all of you. Thank you so much for watching. Please put a like on this video, subscribe to our channel, and we see you next time. Take care.